This is all about initiating a minimum position size. So I'll let you kind of ask or kind of read through this. Wasim, great question. You had some great dialogue as well in the weekly notebook review on Monday. So thank you for participating in that and really, and really being another great member of Hedgeye Nation. If you guys didn't get a chance to watch the weekly notebook review or don't know what that is, I hosted on Twitter Spaces weekly. This week happened to be on Monday afternoon for the first time ever. They're normally on Wednesdays at 2 p.m. and they'll most likely be there moving forward on that. We might have 1 week here in December that we got to kind of move it back a day. But in general, they're Wednesdays at 2 p.m. and we do stream on Twitter Spaces. But then also I share my screen and we kind of live stream both on the Hedgeye website as well as via the Hedgeye TV YouTube channel as well. So getting into this is minimum position sizing, right? So where do we start? And the answer really becomes it kind of, as we just reviewed, right, in terms of sizing rules, it's going to depend on a bit of that kind of risk tolerance standpoint, right? But like a new, the key rule to a new position and entering a new position is, not to, if you're going to open a new position, new asset class, is to open it at your minimum sizing, right? So if you're going to just make that decision, same thing, like if you're making a decision to basically get out of something or to potentially take something down below your minimum, you kind of have to make the decision whether or not you just want to get out of all of it or you just want to keep kind of riding it, right? So in this case, the question is more geared towards adding a new position, right? And so, you want to get it to your minimum sizing. In the case, I'm just going to use kind of what I reviewed at the beginning of the call in terms of a 2% US, equity. I keep calling US, but we have many international followers and the same concept applies, right? So just an equity ETF, a minimum size would be about a 2% position, right? So let's just say it's, for simple sake, it's, beta is 1, right? Or close to 1. So, you're going to say, okay, now the question is, do I just hit the button one time and buy kind of 200 basis points of that security? That becomes a bit more of a personal question and really like how much time or kind of what's your schedule, what's your process. Not everybody can dedicate, hours throughout the day, in executing on the process. So, what I would say there is, there's a couple things you could use, right? You can use limit orders in the morning, right? You can put in limit orders at kind of near the bottom in the risk range and things that have a bullish trend. And you might want to either be building a new position. So a good example and one that we're going to use here in a minute is TAN, right? So TAN was added to the ETF Pro product on Monday. And then Keith hit the button on Tuesday afternoon at 3:27 p.m. And we're going to get into that as the next example. But basically, my point is that you can use, even if you're not kind of paying attention, or not paying attention, sorry, and even if you're not kind of like, in front of the screen executing and trading, you can use those limit orders to your advantage. I think, that's certainly something that I used a lot when I was working my full-time, sales job, software sales job. And then as I transition here into Hedgeye, I've got a lot of different meetings and stuff like that as well. So kind of using those limits, being organized in the morning, creating your process, working with your schedule, understanding what that means and how to, leverage this process, the Hedgeye process, into your portfolio management and risk management, repertoire is a very personal thing. So some folks might just buy 200 basis points saying, yep, I'm getting a new minimum position size. Others, like this example I'm going to show you, might hit the button 4 different times and use kind of 25 to 50 basis point, maybe 100 basis points at a time type exposure, or type execution to build up to that position size. Daniel, do you mind showing the next screen here? Yeah, perfect. So right now, what I wanted to show is really the example that I gave you. So post the RTA, right? So there's two slides I'm gonna review, but one is post the RTA. First of all, don't chase, right? So if tan, tan should have been on your radar because it was, published on Monday morning and added to ETF Pro along with two other new longs, right? So tan should have been on your radar and should have been added to some form of watch list that you track. Personally, I have an ETF Pro watch list, both long and short, so that when the market is kind of either if like say the VIX is at the top end of the risk range and we're here remaining in the chop bucket, I'll go to the long book or the long watch list and I'll quickly see kind of what might be for sale on that day, and then where does that fit within the risk range. But that's might be another conversation or another kind of example down the road. In this case, right, the RTA came out at 79.64. The like many RTAs, the security kind of certainly was bid up, right? So maybe you have a little bit of patience there, but you also don't want to miss it, right? So you don't have a position on at all. You don't have any exposure to tan, and this is the first time, right? Keith's hit the button in RTA, and it was added on an ETF Pro on Monday. So maybe you buy 25 basis points. Again, this is just all hypothetical. This isn't saying, this is what I did or anything like that, but this is just a way of executing if you wish to kind of try to build up to that minimum position size. So let's just say you buy 25 basis points on that first kind of pullback on red there at 79.80. You give a little bit more time, you have a little bit more patience. That he hit the button again down at 79.64. So that was an entry point that he felt was certainly worthwhile to hit an RTA. So assume that that's kind of, pretty close to the low end of the risk range. Next up, maybe put in another limit order there, right? So, around 79.70, right? So again, you get another 25 bips there. This is a bit of a tough one though, right? Because if you're not kind of active about it, and I know, so I understand this, that it could be challenging if you're not kind of bolted to your seat there with that RTA coming kind of in the last half hour of the day. But, it is what it is at the same time, right? So, let's just say you bought another kind of, but this time you're like, okay, I've got my 50 basis points. I need to really try to get this ramped up to my minimum sizing. So let's say you bought another 50 basis points, right at where his limit order ends, so 79.64. That's a tactic that I used to use a decent amount, right? Where you see the RTA, you're really maybe you gauge what you want to do, but kind of putting a limit order back where that entry price is doesn't mean that it's always going to come back to it. But it could be a kind of a best practice for you, right? I've heard a lot of times like, oh, it runs up, right? Or it's so hard to get these like illiquid stocks to get in at the same price as Keith. Well, you know what? Have some patience. It's very possible. I'm showing you on the screen that it's very possible to re-enter and to get, even if at that point you put a limit order for 200 basis points at his entry point, I don't think you'd have anything to complain about, right? So again, 50 basis points, 79.64, and maybe you did another, you kind of put one in right at the end of the day here. You saw it kind of falling off, and so you got another 50 bips at 79.54. Well, guess what? And I'm going to tell you that this was absolutely 100% accidental. I just randomly looked at this chart and saw entry points that I was like, okay, if I was doing this in real time, where would I have been, right? So this is kind of where I would have put some limit orders and executed. And guess what? I got built up to a 1.5% position size, which would be a minimum, which would have been kind of, my personal minimum size position for TAN, just because of its kind of beta exposure. And that was a weighted average price of 79.64, which, oh my gosh, happens to be the entry price that Keith had as well. Again, I swear to God that was purely accidental. But holy moly, there it is. You can do it, right? So even if you, again, with some patience, with some tactics, there you go. I think the other thing too to comment here on building position size, and especially with this example on TAN, Dan, do you mind going to that next slide? Perfect, thank you, sir. This is something where if you kind of have all of the products intertwined together, and in particular, kind of, in this case, you're going to get Macro Pro, the re-rank, the ETF Pro, and then RTA, right? So on the far left there, you've got November 28th, which was Monday, and then November 29th as I highlight, and then kind of December 1st as well. But let's go back to Monday, right? So Macro Pro re-rank comes out usually in the morning, or it comes out in the morning shift, usually in the morning shift, and typically comes out sometime between 11:30 and kind of 12, right? So give or take. And in that Macro Pro, he added ETF at a minimum size. So right out of the gate that Keith has it on as a minimum size as of Monday morning. It then came out. So he then told the team, listen, add TAN to ETF Pro. So that note came out around 11:30, and I've highlighted where on the far left hand side there, about the time that it would have hit your inbox. So that price point is give or take 80.50, give or take, right? So at 80.50, if you kind of you don't know, again, you don't know that he added it at his min size. But let's just say, you know that it was added to ETF Pro, right? So you're like, all right, this is a new long. That we've been getting longer of kind of certainly U.S. exposure, or just kind of quality equity exposure. And this was good enough for Keith to signal and send it out to the crew. So here's the setup kind of on the 28th, right? So whether you acted on that or not, that's up to you. Now, again, if you've got ETF Pro and the Macro Pro, and he's adding it to both components, then I would say that if you're really following the process, you probably added it to your min, or you probably should have added it to your minimum sizing. Kind of going into certainly kind of the afternoon on that sort of like on red, right? So call it around somewhere between 80 and 80.50. You could have put in a couple limit orders and gotten it up to your minimum size. Now, on the 29th, you've got a Macro Pro re-rank came out again in the morning, and you saw that he added 50 basis points. So that would have been kind of around, so kind of actually closer to about $80, right? So, he got it to his min on Monday. He then added 50 bips on Tuesday morning. And come the afternoon at 3:30, that buy RTA signal hits your inbox, right? So all of a sudden, if you're kind of combining all the products, here you go. You got a pretty good glimpse and idea. Okay, this is kind of okay. So it's got a minimum size on Monday. He added 50 basis points on Tuesday morning. Then he sent the RTA, which really means it's at the kind of low end of the risk range, and worthwhile sending out to everybody, right? So right there, you could have a reasonable opportunity or read through to building that up to your mid sizing, right? Especially as you see, where it was within the re-rank in the Macro Pro product. Then, right, so we have kind of on the 30th, things kind of moved from not as good pricing in that 79 kind of 64 range, but right, if you don't chase it right out of the gate on Wednesday morning, you did have an opportunity to kind of, it pulled back, right, and that purple box did give you an opportunity post RTA. So let's just say you don't have ETF Pro, let's say you don't have Macro Pro, and all you do is subscribe to RTA. Well, this did give you an opportunity to kind of, maybe add 25 to 50 basis points, post that RTA on Tuesday afternoon. And, if you think about it, it's kind of right in line with really where he kind of was adding to it and added that minimum size on Monday. Now, you might not know that if you only have the RTA product, but it is what it is. That sell signal came in the late afternoon on the 30th. Up at I forget exactly where it was, but basically, it was around, I believe, about a 4% return on that RTA signal alone. And then on the first, you got that re-rank update was provided. So post that RTA, and a lot of folks do kind of comment about, hey, what do I do post RTA? Well, again, this isn't a pitch about adding more products, but the more tools you have in your toolbox, is just kind of common sense that you get more awareness as to how to execute and how things flow from one to the other. So that's kind of, again, another good example of building your minimum position, maybe adding up to it, right? So maybe getting to your mids so that when, in this example, right, the sell RTA came in, you had 25 to 50 basis points of ammo and that way you're not violating your minimum sizing. Like, don't be afraid. You spend all this time, working through the process, educating yourself on the Hedgeye way. leveraging, the macro show, the macro team, all of the analysts, et cetera, on the call. Don't hesitate to have confidence in your execution, right? Like if, Keith's at a hockey tournament this weekend, put that puck on net, right? Put it in the top shelf, score that goal.